Hello friends, today we are talking about Adani Enterprises, the big company behind many of India's vital infrastructure projects. They are in mining, energy, ports, logistics, agro, and even digital sectors. Let's break down how this company is doing step by step. Let's start with sales. 10 years ago, Adani Enterprises made about 54,947 crores in sales. Today, their top line has grown to nearly 94,384 crore. That is a steady growth rate of 4% per year over the decade. Focusing on recent years, their sales have fluctuated due to market cycles. Some years up strongly, like a 75% jump in 2022, and others slower or down. The last year showed a slight 1.5% growth. So, it is a big company with fairly steady sales, but susceptible to cycles in sectors they operate in. Now, let's look at expenses. Expenses have risen as the business has grown from 45,564 crore to 80,527 crores now. Most of these expenses are raw materials and project cost, which make up 52% to 85% of cost depending on the year. Manufacturing and employee costs are smaller, around 4% to 23%, and other operating costs hold around 10%. Costs vary with inputs like commodity prices, energy cost, and project activity, which explains some volatility in margins. Now, let's look at operating profit. Operating profit has steadily increased from about 9,383 crore to 13,857 crore. Margins have ranged between 5% and 19%, but stand at 15% currently, solid for such a diversified asset-heavy company. Let's look at other income. They booked about 6,288 crore as other income last year, which includes earnings from investments, joint ventures, and asset sales. This is a significant income source and can boost profits when the core business faces pressure. Now, let's look at interest expense. Because Adani borrows heavily to fund expansion, interest expenses are substantial, 5,883 crore last year. This weighs on profits, especially if revenues don't grow fast enough. The company also incurs heavy depreciation of 4,561 crore annually, reflecting wear and tear on its physical assets like ports, plants, and infrastructure. Now, let's look at net profit. Their net profit stood at 7,209 crore last year, which is up significantly from 2,646 crore a decade ago. That is 8% growth annually, which is good, but less than the stratospheric growth of revenue or operating profit because of the high interest and depreciation cost. Return on equity is roughly 9.8% and ROCE about 9.45%. Debt to equity ratio is 1.82, showing the company carries significant debt given its capital intensive operations. So, overall, Adani Enterprises is a massive player growing across sectors vital to India's infrastructure and development. The company shows solid revenue and profit growth, but with big capital cost, interest bills, and cyclical swings. It's a company for investors who want exposure to India's transformation, but can handle the ups and downs that come with huge infrastructure investments. If you found this helpful, subscribe and tell me which company you want to hear about next, right here on Wealth Growth Club.